Mike Black was impressed when RBC assigned a vice president to look after his retirement nest egg, almost $1 million. But over 6 years, he says he paid more than $30,000 in mutual fund fees and earned less than 3% a year in interest, which was below the market average. Black discovered that his vice president was actually licensed as a dealing representative, a salesperson.
When I found out what her designation was, that she wasn't an officer of the company, that was very upsetting, really. You know, it's just kind of like, wow, I don't know who it is that you know, would be a commissioned salesperson that in fact would walk around with a card that says Vice President.
Now, a report released today by the Small Investor Protection Association says there are about 120,000 people registered as financial professionals in Canada, but the vast majority of them are those dealing representatives. Only a fraction have a legal responsibility to act in the client's best interest. Larry Elford is the researcher behind those numbers, and he said titles like financial advisor or vice president can be used by anyone.
They're there to try to instill trust in clients, to make them be vulnerable and reduce their level of suspicion and mistrust, and hand over their money. And they work very well to do that.
An RBC branch manager who contacted Go Public said his bank recently started calling tellers client advisors. But he says they're often young people who took an online course to sell mutual funds.
When you've got advisors who are put in that position who don't have experience and don't have the knowledge and capability to provide that advice, then you're putting clients at risk.
In an email, RBC told Go Public it stands behind the advice and support its financial advisors give clients. Other bank employees who contacted us said they would like to give financial advice, but in reality, they are pushing products to hit sales targets. Erica Johnson, CBC News, Vancouver.